What's going on, guys? In this video, I'm going to compare 3 different investing strategies onto how to invest in crypto over the last 2 months, and I'm going to compare the results. I'm going to compare them between just buying and holding, dollar cost averaging, and trying to time the market and buying in on the dips. Now, this is only in the last 2 months, so there is a very big caveat there, because when you're investing in crypto coin, especially in Bitcoin, you want to do that for the long term, in my opinion, not your financial advisor. But if Bitcoin is not one of those movers that's going to go crazy up, crazy down, and you're not going to try to trade Bitcoin, that doesn't make sense. If you're trying to trade Bitcoin, you're kind of not, in my opinion, you're not doing it. You can do whatever you want with your money, right? So my name is Aaron. If you're new to this channel, I'm just a cowboy, not your financial advisor. I want to get right into this thing. Now, let's take a look at what Bitcoin's been doing over the last 3 months. The last 3 months have been kind of wild. It started in September, October, and it's run up, and then it's just completely tanked here. This huge run up always has to call for a cool down. But what's interesting is that in the market right now, there is some real fear in the market, right? Here's the fear greed index. And when, this is not me who said this, but if people are fearful, then that's when you be greedy, and that's when you start to buy things. If people are greedy, that's when you're fearful, and that's when you need to start selling things. And right now, last week was extreme fear. Yesterday was extreme fear. Today, 27 fear. It's still extreme fear, in the market. Taking a look at what's happening with the investors, this is just the digital asset fund flows and just how much money is flowing in or out of any given asset. Now we take a look at Bitcoin here, and Bitcoin has $90 million flying out of Bitcoin, right? This is money that is leaving Bitcoin. Also, Ethereum is not doing too well at $63 million just last week, okay? The only thing that's doing kind of well is Solana at $6.7 million, gaining a little bit of momentum here. But for the most part, Bitcoin is controlling the market. It always has. Maybe it always will. I have no idea. But these two big dogs are down and bleeding right now. Again, should I be worried about this? I don't think so. I personally think this is just a temporary cool down. Am I a little worried? Yeah, I'm a little worried. I'm not trying to spread fear here. I'm just trying to make the sound decision for me. Hey, am I holding Bitcoin? Is this the right move? But of course, you know me in my position. I'm a maxi. I want to hold Bitcoin until I die and then pass it off until someone else holds it until they die. But here's the rainbow chart. This is just a cool tool to see on where Bitcoin is at in its current, historical prices and stuff like that. So right now it's in the yellow, meaning no one knows what the heck is happening. So they just say hold, all right? You can go to bitcoinchaincenter.com for this thing. I mean, if it's in the blue, that means basically a fire sale, but we wouldn't see that until it hits 20,000, and that it would be a fire sale. All these institutional investors would be buying into that. Now, now that we took a look at the Bitcoin chart, we need to take a look at my my research here. Let me break this down for us. We have here in this column A, the every day since October 29th all the way to September 17th. And that is that's just the date. Then the Bitcoin price on that day. This is the average price on that day, right? So little small caveat there. This is the percentage change, and I think this is important. I'll show you exactly why that's super important. And these are the 3 strategies: dollar cost averaging, timing the market, and the standard one, which is just kind of like, you could think of that as your control. Now, I set this up, and I didn't set this up. My brother-in-law, Matt, set this up for me. And I was telling him, okay, I need to know the 3 different strategies here. And he set it up here. So big shout out to him. Now, let's just take someone who can only invest $250. If you have $250 and you just bought in October 29 at $60,767 a Bitcoin, if you would have held, you would have made nothing. You would have lost 21% of your income with a $250 initial investment. You would end up with $196. Pretty bad, okay? That is the first one. Think of that as your control. That's what would have happened if you just bought and hold. Now, big caveat here, and it's that this was only 2 months, okay? If you're holding Bitcoin, like I said, you want to hold for a long period of time. You value Bitcoin not because it's volatility and how you should trade it. You value Bitcoin because you're maxi, because you don't trust inflation, you don't trust governments, you don't trust anything that's happening right now in the market. And if you're like me, you're tired of it. And so I think Bitcoin is the exit strategy. There is no exit strategy outside of Bitcoin, leaving Bitcoin. Bitcoin is the exit strategy. This is my personal take. Of course, you're your own financial decision maker, so you could do what you want. It's not on me. And so I just realized this is a little bit off camera. There we go. So that is the first. That is the first thing right there. Now the second, we're just going to take here dollar cost averaging in. Dollar cost averaging in, if you don't know what that is, it's where you just take a little bit every day and or every week or whenever you can and just buy a little bit more every day. And what that does, it takes the volatility out and you just get the you get the natural cadence of the market. That's all it is. So taking the volatility out and you just put in a little bit every day. And this is what's recommended for most, if not all, investors. You can't beat the market. You can't time it. It's time in the market, not timing the market. And so we're going to put that to the test here. If you put in $5 a day, in the first day, you make $5. Second day, Bitcoin went up, you make $10.12. You made 12 cents. Congratulations, you're rich. Now the next day, $15, you get 9 cents, and so on and so on and so on. And eventually, all the way up to December 17, which was just a few days ago, you would have lost 0.43% on your initial investment. Now, this is actually a good thing. Why? Because the market took a downturn, and so you were able to preserve your assets, and you were able to do it at very, very minimal cost. You lost what, $1.13. So, or $1.07 rather. That's nothing. Which is great. So you were able to protect yourself from this volatility of Bitcoin, not like the control, not like someone who just bought in with their whole cash. And this could either be $250 or $2,000 or $20,500. It doesn't matter. It's all kind of the same thing. Dollar cost to average in, and you take the volatility out. So you make about, you don't make any, but you just kind of save. You stay still. Now, what if you were trying to time the market? Now, there are a few caveats for this. One, no one can ever time the market. If you think these guys who do their technical analysis and they could, they predict, they could say, oh, I called it. They didn't call it. They called a whole bunch of stuff. And then one of them was right. And then all of a sudden they're selling some course and selling you on some private group or whatever, dude. It doesn't make sense. No one can call this market. I don't care who they are. No one is Nostradamus and with their crystal ball and their gold tooth and their peg leg and their parrot. I don't know why they turned into a pirate, but they cannot call this market. No one can. And so, but let's just say for the sake that you can. And like the other two people, you only have $250 to invest. So you take $30 and you invest it for the first time. And now you set this rule for yourself that at every time the market drops in one day above or below 5%, like 5% or below, it drops more than 5% or below, that is when you put in another $30. Okay, so and I could have done also, I could have tried to add in, you sell when it goes above 5%. I didn't do that. It's just if it drops below 5%, you then buy in $30, and it did that, every single time. And now another caveat: you don't know how many times it'll drop below 5%. Okay, we know in hindsight, but on October 29th, you have no idea. So that is another bit of caveat. So you take that $30 and you just let it coast until November 17, where the first 5.45% decrease happened. You guys see that? 5.45% decrease happened, and you buy in with another $30. Now you're at $59.84. Okay. Then another decrease happened at below 5%. And that's on November 19th, and you put in another $30. Okay, so you're now at $86, and then it happened again here I just put a like 4.65. I rounded up November 23rd, and so it happened again. So you buy in again, and this happens here, and this happens here, and you kind of get the point. Every time this happens it drops below 5%, you put in another amount of dollars, or another $30. Your initial investment would be a total of $240, and you would have had you would have been basically break even. You would have made 29 cents. You would have made 0.12 cents. Now this one, row E, timing the market, has a ton of caveats. Number one, no one really knows when to time the market, right? Now, if you had $240, it could have hit, minus five, and you would have been all out. And then it just could have kept on doing it. So you have no idea. And even though it saved a little more, like you actually made a little money, it's so negligible. It doesn't even make sense. Negligible. It doesn't even make sense to do that. So you would need not crystal ball, powers, but maybe look up at the stars, read a palm, kind of get the gist of what it was saying. So, and that's even impossible. So in my opinion, and I'm not your financial advisor, it seems to me that dollar cost average is the safest way to invest your money in this bear market, because we have no idea. And when you dollar cost average in, you see that it just averages out all these prices. So if you have only $250, you have to say, okay, I have $250 to invest in for 2 months in crypto. I'm going to dollar cost average $5 a day. Why? Because I've seen historically that it could preserve my wealth. Now, if the market tends to go up, then yeah, you're gonna make more money. But if the market is doing all this kind of stuff and it's sticking in this yellow like Bitcoin land price, you know what I'm saying? We have no idea. We have no idea. And I don't care what YouTuber you're watching or what, technical analysis you think you got. To me, you just take the safe road here, especially during this time, because there is a lot of manipulation going on. There's a lot of fun. There's a lot of things. I've heard rumors where billionaires were getting divorces just to like hide their stocks, selling off their stocks. Elon Musk, Jeff Bezos, all these people are selling off their core holdings, and I don't know what they're going to do with it. Maybe they buy in more. I have no idea. I'm just a small fish, a small lone cowboy riding out here just trying to get all the other cowboys to say, hey, guys, try to preserve the wealth here. We are thinking about our futures, our family's futures, our family's family, and the children and the children's futures. You know what I'm saying? Like, to me, dollar cost averaging just seems like the smartest way. Find these good projects, right? Look into these projects that you really believe in that could go crazy and stuff like that. Dollar cost average into them. And that's it. That's all I got for you. I'll see you later.